Good morning, and welcome to the Watsco fourth quarter and year-end 2014 earnings conference call. All participants will be in listen-only mode. Should you need assistance, please signal a conference specialist by pressing the star key followed by 0. After today's presentation, there will be an opportunity to ask questions. To ask a question, you may press star, then 1 on your touch-tone phone. To withdraw your question, please press star, then 2. Please note this event is being recorded. I would now like to turn the conference over to Albert Nahmad, Chairman, President, and CEO. Please go ahead.
Good morning, everyone. Welcome to our conference call. This is Albert Nahmad, President and CEO, and with me is Barry Logan and Paul Johnston. As always, we like to state the cautionary statement. This conference call is forward-looking statements as defined by SEC laws and regulations that are made pursuant to the safe harbor provisions of these various laws. Ultimate results may differ materially from the forward-looking statements. Now on to our results. Well, we had another great fourth quarter, which completed a very strong and record-setting 2014. We've established new records for earnings per share, net income, operating profit, operating margins, and sales. Interesting enough, we did that in 2014, even after we made substantial investments in our business. For example, we added more products. We launched new technologies. We opened new locations. And we added over 200 employees, or about 5% more to our organization. We make these investments to generate more profitable sales growth, development of market share for our many manufacturing partners, and to provide a great customer experience for our 60,000 contractors that we currently serve. Now, highlights for the quarters are a 38% jump in earnings per share to a record 69 cents, a 30% increase in operating income to a record $52 million, a 100 basis point expansion in operating margins to a record 5.9%, a 40 basis point improvement in gross profit margins, and a 60 basis points decline in SG&A as a percentage of sales. That takes us to a record low for that item. During this quarter, sales increased 6% to a record $877 million. HVAC equipment sales increased 8%, reflecting continued strong demand for higher efficiency systems. Other HVAC products increased 2%, and commercial refrigeration products increased 8%. Now let's take a look at the full year highlights. A 17% increase in earnings per share to a record $4.3. Let me say that again. A record $4.32. A 13% increase in operating income to a record $306 million. A 60 basis point expansion in operating margins to a record 7.8%. A 20 basis point improvement in gross profit margins, and a 30 basis point decline in SG&A as a percentage of sales to a record low. For the full year, sales increased 5% to a record $3.94 billion. Residential HVAC equipment sales in the U.S. increased 9%, reflecting double-digit growth in sales of high-efficiency systems. Other HVAC products increased 2%, and commercial refrigeration products increased 7%. The balance sheet at year-end remains conservative with debt to EBITDA of under 1 time. Regarding dividends, we recently increased our dividend rate 17% to an annual rate of $2.80 per share. Our plan is to continue our policy of increasing dividends as we remain confident in our ability to generate strong cash flow while maintaining a conservative financial position and a low cost of capital to invest in our business. We are confident about the future. We will continue to act with a long-term point of view and sustain many principles that have made us successful this far. With that said, Barry, Paul, and I would be happy to answer your questions.
We will now begin the question and answer session. To ask a question, you may press star, then 1 on your touch-tone phone. If you are using a speakerphone, please pick up your handset before pressing the keys. To withdraw your question, please press star, then 2. At this time, we will pause momentarily to assemble our roster. The first question comes from Matt Duncan of Stephens Inc. Please go ahead.
Morning, Matt.
Good morning, Al. Congrats on a great quarter.
Thanks very much. We feel good.
So, Al, you made reference to this in your prepared comments, but you guys have been adding a lot of technology to the business to help your customers. Is there any way to quantify the impact you think that may be having on your market share gains right now?
That's a good question, Matt, but I don't think we could answer that. We don't know. We just know that you want to be the best there is in this technology with our contractors. And we're just at the beginning of the investment cycle, so...
Yeah, I mean, maybe one way to look at this would be, have you looked at the growth rates in the markets where you have added the technology where you can now order through the app? Are you seeing the growth rates pick up in those places as you add this technology, or is it just too early to really know for sure?
I think it's too early. Okay. We're just too busy putting out more and more technology. The apps, for example, are constantly being updated. We're introducing more and more tools. This is a big deal for us. And I think will have a huge impact on the company going forward.
Okay. In terms of equipment growth, you had another very good quarter there. Are you seeing, do you think, any impact from the efficiency standard change in the Sun Belt, or is this really just sort of good market share gains and good market growth?
It's the latter. I sort of expected questions about this 13 SEER thing, and we don't really focus too much on that because everything we think about every day is long-term, and some of these things have a short-term life, and we just deal with it as it comes, but we don't really focus too much on it.
Sure. Okay, last thing for me on the non-controlling interest quarter, it looked like it had taken a nice increase year over year. Clearly your carrier JVs must be doing well. Is that a function of good sales growth, or the margins showing marked improvement there? Is there anything you'd call out about what you're seeing from the JVs?
Barry, you want to deal with that?
Sure, Matt. Well, the JVs are performing very well across the board in all markets. So, no, it's just raw performance, sales growth, gross profit growth, and EBIT margin growth that continues on the momentum they've had for the last 5 years. So it's simple, good progress on behalf of all the JVs.
Okay. Thanks, guys.
Sure.
The next question comes from Josh Poklinski of Buckingham Research. Please go ahead.
Morning, Josh.
Morning, Al. Just a question for me, Al. I know that, obviously Canada is not an enormous part of your business, but with the currency move there, and then obviously the fact that all the equipment is made in the U.S., can you guys talk about, either the margin headwinds or pricing actions you need to take to offset that this year, and maybe what you guys are pondering here in the near term on that?
Well, all I want to say about that is that Canada is a significant part of our business, and we're doing well with it. We're dealing with whatever comes up. There are no issues that I can report. It's a big problem for us in Canada.
I guess, does that mean to say that there's a pricing action being taken, though? Because you do have, significant currency headwind.
No, those are things that I don't want to talk about. We have strong competition in Canada. We're just doing well there. And things will come up on currency and kinds of things you're talking about. But we seem to be navigating them very successful, and I think that should continue.
Okay, and then just back on some of the technology investments, should we expect that to be up again in 2015, and at what point does that start to level out and be in the comp? I know that it's a long-term view, and you guys don't really pay attention to your spend, but...
Yeah, I'll give you best I can on that. You should see increasing investment for some time. I see no end to it, and I see increasing investment.
All right, thanks.
The next question comes from Walter Liptak from Global Hunter. Please go ahead.
Morning, Walter.
Hi, good morning, guys. Thanks for the good quarter. I wanted to ask about, your inventories. it seems like some of the seasonality changed this quarter where your inventories built up $60 million, and typically they go down by about that much. Is it a SEER equipment build? And I wonder if you could comment on...
Sure. That's a good question. Barry or Paul, you want to deal with that?
Yeah, Paul, go ahead.
Oh, okay. Yeah, we had a slight build, because of the equipment change, but it was very, very small. Most of it was just solid blocking and tackling that our people were doing on new branch ads that we've been putting in place, as well as just balancing our inventory up to get ready for the season.
Yeah, there have also been, just to add to that, there have also been some product lines that have been introduced this year that requires a bill in inventory for sales in 2015. That's part of the investment we've been making.
Okay, got it. So not a lot of SEER 13 in that inventory bill.
No.
Okay. And I think about this time of year, you don't give guidance, but you kind of can talk about the market and what you're thinking about for next year. Do you think next year for HVAC equipment we should see similar mid-single-digit growth to what you saw this year? Or is there something changing about your markets where the growth might slow?
Well, as you said, the first part of that statement is we don't like to talk about the year because we're just 1 month and a few days into the second quarter, and we will not mention what we think is going to happen to the industry. We don't know. But I can tell you that I like what I see for Watsco in the first part of the year.
Okay, fair enough. Thank you.
Once again, if you'd like to ask a question, press star, then 1. The next question comes from Rohit Seth from SunTrust. Please go ahead.
Hey, guys.
Good morning.
Great quarter. Good morning.
Thanks.
I just got a quick question on the energy costs. Is there a substantial portion of your costs there, on the diesel fuel?
No, it's not a big deal.
Not a big deal. So there won't be any savings with it coming down so much?
There will be savings. It's not
material.
A mountain mover, no.
Okay. And then could you you usually break this out on the U.S. Residential equipment. What was the growth there?
Really all markets were consistent with the overall growth rate.
Okay. Okay, great. That's all I had. Thank you.
The next question comes from Ryan Merkel from William Blair & Company. Please go ahead.
Thanks. Very nice quarter, guys. Morning.
Thanks.
So did you talk about what drove the strong gross margins in the quarter? I might have missed it.
We didn't get a question. We've reported what we know in the press release, the efficiency improvements.
So it was driven by the mix to the higher SEER equipment?
Mix is a very part of it, yes.
Okay. And then what was the growth rate of higher SEER equipment then? Was it higher than the 8% total equipment growth then?
I don't think we want to get into that sort of detail, Ryan.
Okay. And then I guess lastly, the OEM price increases, are those sticking in the market? I know it's early.
Yes. The answer is yes.
The answer is yes. Okay. Great. Thank you so much.
And as I see there are no other questions, I would like to turn the conference back over to Mr. Nahmad for any closing remarks.
Thanks again for being on this call, and we look forward to the next call. Bye-bye.
The conference is now concluded. Thank you for attending today's presentation. You may now disconnect.